Hi, good evening, everybody, and welcome back to another class. Stan, my voice audible enough?
Yeah, it is.
All right. So good evening, everybody. Today we're going to be starting hierarchy of PDRAs, and for today's class, we'll be looking at reclaimed blocks, always represented as RB, mitigation blocks, always represented as MB. We have other blocks, always represented as what? OB, and we have breaker blocks, always represented as what? BB. So when you see BB anywhere, when it relates to trading, it literally means what? Breaker blocks. When you see RB anywhere in relation to trading, it means what? Reclaimed blocks. When you see MB anywhere in relation to trading, it means what? Mitigation blocks. And when you see OB anywhere in relation to trading, it means what? Other blocks. A lot of you are very familiar with the other blocks because literally other blocks are almost the same thing with demand and supply zones. The only difference between order block, a bullish order block, and a demand level is that another block does not need to be break structure to be called an order block, right? But demand zones, I told you, must what? Put in new highs for it to say that is what? A demand zone. The same thing, the difference between a bearish order block and a supply level or a supply zone is what? That the bearish order blocks don't need to break structure to be called what? Order blocks, right? But then they are very similar, right? Very, very similar. That's why you can see people call a particular trade setup that you want to buy yourself from. You see somebody say demand zone. You see the next person say order block, whatever they call it, is what? Very similar and can be interchanged. Definitely they can be what? Interchanged. But for the reclaimed blocks, the breaker blocks and the mitigation blocks, they are different, although you buy and you sell them. Just like we have bullish order blocks and bearish order blocks, we have what? Bullish reclaimed blocks and bearish reclaimed blocks. We also have what? Bullish mitigation blocks, bearish mitigation blocks, bullish breaker blocks, bearish breaker blocks. So in today's class, we're going to be what? Introducing these four PDRAs and try to understand the concepts behind them. Now, I want you to know, first of all, that everything is derived from what? An order block. This is the most popular block in this market. And that is why you see that eventually, no matter the concepts that we trade, most people tend to what? Point back to order blocks. But they are not the only blocks in the market. They are not the only things that send price back up or send price back down. Actually, there is a hierarchy called what? The hierarchy of PDRAs, which some people can call what? Hierarchy of premium discount arrangements, right? Which the order block is not even the first on the list. And that is why sometimes you can have a trade setup. I think for most of you that have my WhatsApp, you would have seen me talk about this hierarchy of PDRAs consistently. I've even shown you examples where you can have a breakout block, an order block, and a mitigation block. And you find that price respects what? The mitigation block, ignoring the order block. This happens a lot of times because it's just like your dad has what? 5 children, 5 sons. The first son, the second son, the third, the fourth, and the fifth. For most of you that are very traditional, let's say for those Igbo people that are very keen on inheritance and the rest of them, you would agree with me that they would want to give what? The first child the biggest portion, right? The first son, then the second, then the third, the fourth, or the fifth. Or when they're sharing meal, like food, they'd want to give the first son the biggest, right? Just like that. If the first one is not around, then the second son takes the biggest. If the second is not around, then the third takes the biggest. That is how this premium discount arrangement is. it has a hierarchy that it follows. One is bigger than another. One is what bigger than another. One is what bigger than another. So other blocks are not even the top on the list, right? I'm going to drop the hierarchy of PDRAs later, so you guys look at it. But for what we have in today's class, reclaim blocks, mitigation blocks, order blocks, and breaker blocks. Now, if you look at what I mapped out here, okay, I want to add something just for reference purposes. Flip zones, which I'm going to represent as what? FZ. This is it. Flip what? Flip zones. Okay. Now, if you look at what I mapped out here, we have what? We have your typical order block at this point. Now, you agree with me that now I'm going to be calling the other blocks demand zones instead, so that people don't get confused, since most of you already can recognize demand and supply zones. Now, you agree with me that every demand zone in the market has what? A function, which is what? To send price back up whenever price approaches them. That is the function of this demand, right? And then every supply zone in the market has what? A function, which is what? To send price back down. Which means that every valid demand zone is expected that when price comes to it under normal circumstances, that when price approaches it, it rejects price to the upside. And which also means that every valid supply zone is expected that when price approaches it, what does it do? It sends price back down. But then let's say when something happens that these things are what? Unable to function properly, they're unable to carry out their functions, something else is being created. And that is why I told you that these reclaim blocks, these breaker blocks and all of them, they originate from the inability of other blocks to carry out their functions. Since other blocks cannot do what they are supposed to do, something else is created to complete that task. Let me put it like that, right? So here you have an order block that is what's supposed to send price back down, and instead price fails, like price goes below it. So two things can be created when an order block is failed, or two things can be created when a demand zone is what? Failed. It depends on two conditions. One, right, the failure of a demand zone with a reaction to it, right? When a demand zone fails with a reaction, or when it fails what? Without a reaction. These are two ways that a demand zone can fail. What do I mean by demand zone failing with a reaction to it? Price comes, mitigates that your setup, buys a bit, maybe 1:1, 1:2, and then fails. It means that what? That this demand zone failed what? With a reaction. Price reacted to the demand zone before what? Before failing it. It's very different from when price does something like this, just takes out the demand zone without reacting to it at all. The reaction I mean is maybe that partial buy to the upside, right? So a demand zone can be failed in two ways. One, with a reaction before the failure, and two, without what? A reaction before the failure. Now, these two things are going to create what? Two different things. And that is why if you're looking at a failed order block, it is very important that you pay attention to what? How it was failed. Did it fail with a significant reaction to it? Or did it fail without what? A significant reaction to it? That is going to tell you what is created or what it has what created. So you have now when another block is being filled with a significant, what I mean by significant is that it's obvious, like when another block is filled with an obvious reaction to it, price came, mitigated your buy level, and obviously bought to the buy side before what? Before failing. This is an obvious reaction to it before failure. It creates what we call what? A flip zone. It creates what we call a flip zone. A flip zone is just like a supply level being created from a demand failure or a demand level being created what from a supply failure, something like this now. Sorry, let's say we have price selling, a supply zone just like this, and then price comes, reacts to it a bit before finally filling it. That's created what a demand just like this. This is what a flip zone. This is what a flip zone. So a supply level being created from the failure of a demand zone is a flip zone. So how are these flip zones created? They are created from the failure of a demand zone with a reaction before the failure. It's very different from when price does something like this, whereby it takes out that whereby it takes out the level like this without any reaction to it. Now this is going to create what we call a breaker block. So the failure of an order block with a significant reaction to it creates what a flip zone. The failure of an order block without a significant reaction to it, or with little or no reaction to it before the failure, creates what a breaker block. This, you can see this particular one now. It looks like price came to the demand zone and just failed it without what reacting to it at all. This is going to create what a breaker block. This is because there are orders initially resting on these order blocks or demand zones. I told you that demand zones, people look to buy on demand zones. It means that when you have a valid demand zone like this, there are people looking to take what? To take buys on that demand. And what happens when price fails it just like that, without reacting or mitigating these buys? Do you understand? What happens? It comes back to take those orders that were resting there, the money that was resting here, the liquidity of people looking to buy here, mitigate it and do what? Start selling. This is the concept behind what breaker blocks. That when a bullish order block fails with no reaction to it, little or no reaction to it, that it creates what? A bearish breaker block, which you see most people put their sell position and do what? Take sell positions like this. Failure of a bullish order block or a bullish demand zone with no reaction to it, little or no reaction to it, creates what? A bearish breaker block. And if you should flip, this is what it's going to look like when you have what? A supply zone, price putting in lower highs and lower lows. And what happens? Price comes, takes out that supply zone with no reaction to it, little or no reaction to it, right? What does it create? It creates a breaker block opportunity. But in this sense, it's going to be what? A bullish breaker block opportunity. So the failure of a supply zone or a bearish order block with little or no reaction to it is going to create what? Is going to create a bearish breaker block, just like this. You can see the same concept here, the same concept here, right? Why the one that fails what? With a significant reaction to it creates what? Creates a flip zone. So this is the whole idea behind the breaker block. When an order block fails, let's say you have a setup, another block that has met all of the criteria as far as 6 validations. If you guys remember all of our validations, now you validated that order block and it has met all of your setups. Now, what's the next thing you do? If that order block gets taken out, that is when the concept of this breaker block comes in. The first thing you ask yourself is, was it taken out with a reaction, flip zone? Was it taken out without a reaction, or what is created, a breaker block? Now you have to understand that personally for me, I don't trade flip zones. So you wouldn't be surprised if I don't emphasize properly on flip zones on this class. I will just teach you for you to be able to recognize them, but they don't have a good win rate when it comes to the markets. Because most of the times that these flip zones are being created, imbalances are resting above. And that's why you see that majority of times you can have a flip zone and then price like consistently takes it out. I don't think flip zones should have up to 35% win rate in today's market, because today's market is literally targeting everything as liquidity, right? So they don't have a very good win rate for you to rely on them. That is the ones that price take out with what? With the reaction first. The ones that price creates by reacting to an order block before failing it. That's the flip zone, right? They don't have like a very good win rate for you guys to focus solely on them. But it's important that you understand and you're able to identify them at least, right? Then for the breaker block, for some currency pairs, yes, this actually works. For some currency pairs, this actually works. But when it comes to synthetics, it's something that I wouldn't want you guys to consistently trade. Maybe when I get to entries, I will emphasize on it properly. I think somebody's knocking. I think when we get to entries, I will emphasize on it properly. I mean, for the reclaim blocks, but you should understand that it is very important for you to understand the reclaim blocks and the breaker blocks, most especially, and the mitigation blocks. These are the top three most important PDRs, right? Mitigation blocks, order blocks, reclaim blocks, and breaker blocks. The four of them are like the most important, that even if you don't grab the concept of the rest of them, these claim blocks, most especially, I'm telling you, in today's market, especially on synthetic, this is something that you need to understand properly. Now, back to what I was saying. I said the first thing I said was that the failure of a bullish order block with a reaction to it before failing it creates what? A flip zone. The failure of a bullish order block with no reaction to it before failing, that's little or no reaction, whether bullish or bearish order block, sorry, little or no reaction creates what? A breaker block. Now, how are reclaim blocks formed? The failure of a breaker block creates what? Creates an order, creates what? A reclaim block, sorry. Remember that the failure of what? Of an order block creates a breaker block. Now, the failure of that breaker block creates what? A reclaim block. Failure of an order block creates a... That's quite distracting. Failure of an order block creates a breaker block. Failure of a breaker block creates what? A reclaim block. This means that when price creates this order block and takes it out, it is anticipated that it does what? That it comes back to that order block, mitigate the orders currently resting on it, and does what? Sell down. But imagine a case scenario whereby price now fails to do what it's supposed to do, just like this. Like it fails to what? Mitigate these orders and sell to the downside. Instead, it takes out those orders just like this. More like the people that were looking to do what? To sell from the breaker block. They were stopped out or they were taken out just like this. This is where a reclaim block is being created. So when a breaker block is filled, or when a breaker block hits stop loss, or when a breaker block is taken out, whatever you want to remember that as, that is what creates what? That is what creates a reclaim block. The failure of a breaker block creates a reclaim block. Remember how a breaker blocks created. The failure of other blocks creates breaker blocks. Now, the failure of these breaker blocks creates what? Reclaimed blocks. Of all of them, the reclaimed blocks are of highest probability. They are up there when it comes to what? Hierarchy of PDRs, reclaimed blocks. All right? The failure of what? Other block, breaker block, failure of breaker block, reclaimed blocks, right? And then these reclaimed blocks, the whole concept behind reclaimed blocks, when you hear something say reclaim, reclaimed means take back, claim back, come back to claim, come back to take, like more like taking what belongs to you, right? To reclaim ownership of something means that you have what? You have now taken back the ownership of something. And that is how it is on the charts. When you say that a zone is a reclaimed zone or a block is what? A reclaimed block. It means that that block was lost before, but price has come back to what? To take it back. Remember, we had what? We had a bullish order block at this point, which the function of this bullish order block is to send price back to the upside. But if this order block fails to send price back up with no reaction to it first, and then it fails, it is going to flip to a bearish breaker block. Imagine a bullish order block flipping to a bearish function. It means that it has lost its course, right? But if this bearish course now fails to be executed, what happens? Price comes back to claim the initial orders that were raised there, meaning that price has now claimed back its bullish status, reclaimed, taking back what you currently were, or what you previously were. It's just like a boy. You were born as a boy biologically, right? And then now you want to become like, you want to transgender into a girl, right? And then probably after a while, you realize that, okay, this is not something you want to do, or maybe deliverance or whatever. But after a while, you don't want to go back to being a boy. It means that what you're reclaiming your gender, you were led astray a bit, right? You were moving from what you were, but now you are back to what you previously were. That is how these reclamation blocks work. Even for the bearish reclaim blocks, which look quite like this. Sorry, let me see if I have an example for that said already. Okay, no, let me just draft something, right? Now, for the bearish reclaim block, you can have a supply zone like this, and then price takes out that level of supply with no reaction. You have to take it out, right? Take out the other block, and then what happens? Fails the breaker block level, people that are looking to sell that breaker block level, and then comes back to reclaim the initial function of that zone. You know, a supply zone is supposed to sell price, but when the supply zone fails, what happens? A bullish breaker block will be created. And if that bullish breaker block fails, it creates what? It comes back to reclaim its former function. Now it is what? Supposed to sell. That is the meaning of what this reclaimed levels, right? Failure of a breaker block. Remember that I told you that when an order block is created, what does it? When another block is what? Failed with no reaction, it's an opportunity that you just come, mitigate, and what? Sell. Just like this. But imagine that traders have now placed their sell to the price comes, mitigate their orders and what? Sell. And then these traders end up what? Eating stop loss. This is price taking out what? This is price taking out a breaker block. Now this whole thing of price taking out this breaker block is what I'm calling, or what I called, what? A reclaimed block. The whole idea is that when price takes out that breaker block, it now retraces back to the initial order block here, to the initial order block, retraces back to it, and does what? Continue buying just like this. It's just like somebody going in the right way, and then they were led astray, they got distracted and whatever, and then they found their way again back to God. They continued in that path that they previously left. That is what this reclaim blocks looks like, right? Price takes out a bullish order block, which his function initially was to send price back up. That was the initial function. And then it was led astray, and it had to become bearish. But then that did not work out for it. And what happens? It will now come back to its senses and do what? And come back to that initial order block and what? Buy to the upside. The same thing, the same thing for the 1 year as well. You have what? Your initial bearish order block or supply zone, whatever you can recognize this as, that's fine. And then what happens? Price comes. You know, the function of every supply zone on the chart is to what? Is to send price back down. That is what supply zones are supposed to do. Send price back down. What are demand zones supposed to do? Send price up. So imagine now this supply zone fails to send price back down, and price fails it with no reaction to it before the failure. Let me show you guys an example on the chart. I think I have something mapped out on this video. Okay, look at this now. This is what, okay, although there's a gap in price for this particular price action, but if you look at this, this is what a demand zone that has met every criteria of what the demand zone should be like. And then what happens? Price just comes and takes it out. You can see how it took it out. It's not like price what mitigated it and bought to the upside. Instead, what did he do? He just took it out with no reaction to it before taking it out. And then imagine now that I was looking to take the breaker block opportunity at this point. And then you can see that price came and what took out the breaker block. Meaning, if I was looking to sell from here, since this bullish order block has been filled, what is this? This is what a breaker block that you'll be anticipating that price can mitigate and sells like this. But in this case, now you can see that did not happen. Instead, everybody looking to sell here would have been what stopped out. This stopping out or price taking out the breaker block is what creates what a reclaimed block. So in this case now, this is a reclaimed block. When price now comes back to do what, you can see now that what are you anticipating? The price has done what? Taking out that reclaimed level. You are anticipating that price comes back into this initial order block, here, and does what? Buy to the upside. Just like that. This is what the narrative behind what the reclaimed blocks look like. Here you can see again, let me show you a very good example that has played out as per reclaimed blocks for continuation, right? You can see what happened here. We had this particular demand zone at this point. Now, let me take this out so you're not confused. On this particular demand zone at this point, what happened? Price came and took it out. Price filled this demand zone. There's a gap here due to the price action that day, right? But then price took out that particular demand zone with no reaction to it. When you say something reacted to something, it's more like price came to that zone and bought to the upside. But you can see that when price approached that zone, what did he do? He sold straight up to this low. Took out that level completely, right? With no reaction to it. Now, when price does something like this, what is being created? A breaker block, which you're anticipating just like this. This is what a breaker block will now look like. Now, that breaker block is supposed to be, if the breaker block had played out, this is what it will look like. Price mitigates the breaker block and sell what to the downside. Because I told you that bullish order block creates what? Bearish breaker blocks. And bearish order blocks creates what? Bullish breaker blocks. Right? So in this case, since it was a demand level or a bullish demand or a demand zone or a bullish order block that was filled, is going to create what? A bearish breaker block. But now, a case scenario whereby this breaker block was stopped. You can see that this breaker block was stopped out. Anybody that was looking to sell from this zone, they would have been what? They would have been stopped out. You can see the way that price was retraced to the upside. It did not reject down. It did not sell down. Instead, what? It rejected to the upside, just like this. It means that everybody looking to sell what at this level was stopped out. That is the failure of what? A breaker block. And I told you that the failure of a breaker block creates what? A reclaimed block. This is how the reclaimed levels are being created. And so this reclaimed block that you're looking at now, what does it look like? It looks like price now coming back to the initial order block that it failed. Can you see what happened here? After this order block was taken out and the breaker block that it created was taken out, price went as high as this point. And what happened? It came back into the order block. You can see this retracement into the order block before putting in what? A new high. You can see how high price went to after that. This is a very good example of what a reclaimed block. Price took out the demand level, then pulled back, failed the breaker block, and then comes back into that initial level. This initial level here, this one here, the initial order block to what? Function as that order block, pulls back into it and what? Puts in a new high. just like that. That is what an example of a reclaimed block. That is what these reclaimed blocks look like, right? If you look at the things that I have mapped out here, um, let's study these things. Here you have what? A bearish what? Breaker block. You can see we have a bullish order block. Price doing what? This is a bullish order block. And then price fails the bullish order block with no reaction to it, right? Little or no reaction. What do you anticipate? That it pulls back and does what? Sell. Failure of a bullish order block creates what? A bearish breaker block. And if you look at this one, we had price coming with series of lower highs and lower lows, lower highs and lower lows, signifying what? A bearish market structure. And what happens? It fails the bearish order block with no reaction to it, little or no reaction to it, right? It must be no reaction or very negligible reaction. And then what are you anticipating? The price pulls back into that zone and does what? Buy to the upside. Failure of a bearish order block creates what? A bullish breaker block. And let's look at the third one here. This is what? A reclaimed level. Takes out the order block, fails the breaker block, pulls back and what? Picks the order, right? And you have what? The same thing at this point, creating what? A reclaimed block. The same thing here as well. The same thing what? This is a flip zone. I told you when price creates an order block and reacts to the order block before failing it, it creates what? It creates a flip zone. This time it is not what? A breaker block. Instead it's called what? A flip zone. Failure of an order block with a reaction to it before failing creates what? A flip zone. Failure of an order block with little or no reaction before the failure creates what? A breaker block. They are different, right? And then here you have what? The bearish reclaimed block. You can see a series of what? Lower highs and lower lows. And what happens? Give me a minute. We have series of lower highs and lower lows, and price takes out what? Price takes out the breaker block, and the breaker block that was supposed to be formed. Remember that it's supposed to form what? A bullish breaker block, just like this. And price takes it out by reacting what? By selling to the downside, right? And what does this form? This forms a bearish reclaimed block, right? The same thing here as well. This is what? A bullish breaker block. Failure of an order block with no reaction to it creates what? A bullish breaker block, right? These are just the illustrations that I mapped out for today's class, right? So I want you guys to go home remembering what I talked about. I said that the failure of another block creates what? A breaker block. Failure of a breaker block creates a reclaimed block. It's easy. It's just 3 lines that you can always what? Memorize. So long as the failure is what? With little or no reaction. That is very, very correct, right? So in tomorrow's class, we're going to be looking at these things on the charts, right? Identifying them and validating them on the charts, and also mitigation blocks as well. And then we'll look at reclaim blocks for continuations, reclaim blocks for what? Reversals as well. This is going to be like a very interesting topic, trust me. At the same time, very, very important. These are one of the things that you would know that most people don't know. And I keep saying that the difference between you and somebody that is profitable when it comes to trading is what you know and what they don't know. It is usually what you know versus what you don't know, right? So very importantly, you must attend Wednesday's class. Don't try to watch recordings. Let's do chat walkthrough, validations, and proceed on this particular topic. So if you have any questions, this is just an intro, right? But then if you have any questions, jump on the question group. Immediately after the class, I'll go through it. And on Wednesday, 9 p.m., this is where we're going to continue from, so that it doesn't get overwhelming for the new ones. I'm so sorry, right? So it doesn't get too overwhelming for the new ones. So I'll see you guys again 9 p.m.